I never believed in the hedge against inflation because that's so long term. Bitcoin needs to be around for, I think, decades before that happens. It's still just a baby. It's just evolving. It's so early days. It's such a small portion of global portfolios. But as far as a potential hedge against banking issues, yeah, I mean, it's coming up there like with gold and treasury bonds. Now, it's just a high beta, high risk version, but I think it's people are realizing, wow, I really probably have to have some of this, particularly if I'm looking to get away from risk assets like the stock market. This Bitcoin stuff is, if the stock market, if risk assets do recover, it's probably going to outperform.
Mike McGlone, a senior commodities strategist at Bloomberg Intelligence, believes that the banking crisis could trigger the next crypto bull run, with Bitcoin outperforming all other cryptocurrencies. McGlone thinks that as major banks collapse, confidence in traditional financial institutions is being shaken, making Bitcoin more attractive as a hedge against banking risk. McGlone argues that the United States Federal Reserve's unwillingness to ease monetary policy despite the banking crisis is driving the U.S. economy into a recession. He believes that this macro environment will ultimately favor Bitcoin, which will outperform all other cryptocurrencies. To support his argument, McGlone cites the correlation between Bitcoin and the S&P 500 index, which has been significant in recent years. He suggests that the more Bitcoin can sustain above $25,000, the more the S&P 500 index will potentially pressure below 4,000, indicating that Bitcoin is about to take off. In his view, Bitcoin will outperform virtually all other cryptocurrencies, including Ether. McGlone explained on Twitter Tuesday that a supercycle may be happening in Bitcoin. He tweeted, "Looking for a supercycle? Bitcoin outperforms commodities with declining risk, Bitcoin beating gold, the top-performing old guard commodity in 2023 to March 20, by almost 10x may be indicative of a supercycle happening in the crypto." He also tweeted, "What stops Bitcoin from outperforming most assets? Bitcoin is viewed more as digital #gold in a world going that way and maybe moving on from excessive speculation. The 2023 global banking crisis and rising potential for a significant economic reset may mark an inflection." In this video, McGlone talks about how Bitcoin has the potential to outperform every other asset this year and how Bitcoin is a hedge against market crisis, but not a hedge against inflation. He also talks about the Fed's rate hike. Let us now get into the video. Make sure to give us a like, subscribe, and drop your comments below.
Bitcoin was born out of the last significant financial crisis, or the great financial crisis in 2008 and 9. And I think this one's, it's in the process of defining Bitcoin of global digital collateral. Now, that's the current state. Bitcoin has done very well bouncing back above $25,000 resistance. At the time we're taping this on Wednesday, it's around 27,000, while the stock market still is under pressure. And I think what's happening is we're seeing a significant rally in this Bitcoin this year, up to about 73%. Obviously, it was two oversold last year, but partly because people are realizing that it's becoming more like gold and U.S. Treasury bonds, but just a higher beta version of gold. And it's getting gaining accolades as maybe not as so much a store of value yet, but as global digital collateral in a world that's going digital. So this financial crisis is quite significant. It's defining, and I think people are realizing one thing about Bitcoin: it's no one's project and no one's liability, and it's completely independent like gold. The thing is, it has that definable diminishing supply, and it's so low as far as adoption in so early days. And this seems to be the trigger. The banking crisis, I think, when people realize, oh, my money may not be so safe in a fractional reserve banking system. It might be safer in a fully collateralized stablecoin or crypto dollar. It seems to be hitting that inflection point that I've been looking for a while. I'm just kind of, deer in the headlights watching, wow, is it really finally happening? This is an overwhelming, rapidly advancing technology, and most astute, smart people in this country get it. Some don't. They might be incumbents in power, but like all the major changes in history, even like the key thing, the development of euro dollars, that was not really, the trading of U.S. dollars offshore in banks was not really supported by the U.S. government, but we're seeing, I think, this just overwhelming. So I think, I don't know where that's going to go. I do know if the current administration continues to push back, they're likely to be voted out in 2 years anyhow. Like a chairman of the SEC's, but got 2 years left. And I don't know really how to define that so much, but it just means that it's going to be a a pushback in the shorter term, but in the bigger picture, it's really going to be hard to stop this technology. They hiked rates again. The ECB did a week ago, 50 basis points, and it's probably the last hike. Market's already pricing for easing, a little bit of easing, not a lot yet. But the bottom line is they're potentially tilting us towards a significant recession, potentially depression. I mean, the hike into you can't be a hawk in a bank run is the quote from my colleague Tom Orrick. He's our chief economist, and he wrote that a little while ago, and they just did. They hiked, and we were having a bank run. So the ECB. This is a global bank run. And it potentially this country is just getting started. Remember, it's basically only been a year and 1 week since the first hike, the most aggressive hikes on a global basis ever. And there's this rule of long and variable lag. So what I see is the bank situation is a tree in the forest of what I've been pointing out for a while. Commodities collapsing. Now, this just not getting started because everything is tilting towards recession, except things like unemployment. And unemployment can only go one way. It's so low, it can only go up, which means the recession is virtually guaranteed. You look at things like the yield curve. So I think the Fed is just way far behind, like they were so far behind in inflation. Now that inflation is potentially collapsing, and I'll point that out in a second, the leading indicators, peaking housing, the banking crisis, commodities means they should have stopped, and they still hiked rates. So I fully see looking forward, we're going to have official acknowledgement of deflation, other from government statistics, not from forward-looking things like my commodities, and the Fed tightened rates. So they're so far behind. The key thing we're going to end with, we're going to find out and get, is now by this time next year, Giovanni, when we're talking, I'm pretty sure we're going to be talking about a significant enduring deflationary forces, the Fed not easing with the ease that it has in the past.
The Bloomberg intelligence strategist explained last week why he expects Bitcoin to continue to outperform gold and the stock market. Facing the Federal Reserve, inflation, and war, 2022 may be primed for risk asset reversion and mark another milestone in Bitcoin's maturation, he tweeted Friday. It's unlikely for Bitcoin to stop outperforming gold stock market amid bumps in the road as the Fed attempts another rate hike cycle, McGlone opined. In a different tweet posted Saturday, he commented on how recent failures of major banks, including Silicon Valley Bank and Signature Bank, affected Bitcoin. The strategist detailed, banking issues may define Bitcoin and crypto dollars. Bitcoin may be progressing to trade more like U.S. Treasury long bonds and gold as banks come under stress on the back of the bond price collapse. Bitcoin sustaining above $25,000 is a clear sign of divergent strength. Let us now continue with the video as McGlone talks about how the banking crisis is impacting dollar-based stablecoin and Bitcoin outperforming all other crypto assets.
I think the answer is yes. It's kicking off a next bull run, but it's very much subject to the ebbing tide of the stock market. We're talking right now with the S&P 500 around 4,000. I fully expect it to go to 3,000 in a recession, a normal recession, which is predicted with the highest probability since 1982 from the yield curve. And that's going to be a pressure factor on Bitcoin. But potentially we're hitting that inflection now where this recession is going to be great for things like gold and long bonds. And the thing is Bitcoin in there? I think it's hitting that, but it's just hard to say for sure. But I think the more the Bitcoin can sustain above 25,000 and the more the S&P 500 potentially pressures below 4,000, you're going to have an indication that Bitcoin is just going to take off. And we have to get there. It's funny. It's a unique that the problem with the fintech and the new technology was the old guard technology. It's deposit in the bank. And that's the extent that it dropped because of the potential that its bank deposit, which is fractionally reserved, was not safe. So what it's proving is these fully collateralized crypto dollars potentially are much safer than banks. There's no FDIC insurance needed. It obviously needs regulation. That's just a matter of time. It's how the U.S. regulates it that's going to matter. But it's happening offshore. Things like we've seen a major move away from USDC back towards Tether. Tether is the biggest one. It's controversial, but I've been just following Tether since it was around 2 billion back in 2018, and it just keeps going up with bumps in the road. Why? Because I think it's like what happened with Eurodollars about 5 decades ago when entities needed access to the dollar away from the U.S. banking system. They did it in banks outside the U.S. and created Eurodollar system. This is happening in crypto dollars. It's happening fast. The technology is overwhelming. It hasn't been. I think we're at the stage now that Bitcoin's going to outperform virtually all crypto assets if my base case of a severe global economic reset to recession pans out. That's my base case, and I think Bitcoin will continue outperforming. I see Ethereum right now stuck between 1,000 and 2,000. Now it's at 1,700. 2,000 is very good resistance. It is the base layer for tokenization, crypto dollars, and things like that. But now we're in that stage where I think, if I'm correct, the stock market goes closer to 3,000, the S&P 500, and gold and treasury bonds outperform in this significant recession in the U.S., then I think Bitcoin will outperform virtually all cryptos, including Ethereum. And that's been the case so far this year. It's the existing trend, and I think it's going to more likely accelerate. So we have to get through this bump in the road. And I think the bottom line to remember from my standpoint as a strategist, it's my duty to warn people when I see a hurricane coming. I see a hurricane coming economically. And that's just based on what you said, we spoke about earlier, and it's central banks tightening. Despite a bank crisis and despite forward-looking deflationary forces, Bitcoin will probably be the best performer among the cryptos, including Ethereum.
Last week, McGlone also explained why he expected Bitcoin to continue to outperform gold and the stock market. He pointed out that macroeconomic parameters such as Fed hikes, inflation, and the Eastern European war could steepen Bitcoin's maturation. McGlone noted that the ongoing Fed battle against inflation would further aid Bitcoin's outperformance over gold and traditional stocks. The Bloomberg commodity strategist also doubts the global economy would endure the same periods of heavy dollar liquidity as in 2022. As a result, investors are more likely to adopt a keener outlook toward Bitcoin. So far, Bitcoin has also outperformed 97% of companies listed in the S&P 500 index this year. Only 12 companies managed to deliver higher yields than Bitcoin in 2023, with the remaining 488 falling short. The Fed enacted a quarter percentage point interest rate increase after its latest policy meeting, expressing caution about the recent banking crisis and indicating that hikes are nearing an end. Fed projections call for just one more hike this year. A 25 basis point increase was widely anticipated. The decision makes it the 9th consecutive interest rate hike and the second quarter-point increase in a row after a series of bigger rate hikes were implemented throughout 2022. What do you think about Mike McGlone's view regarding the bank crisis and the Bitcoin role? Let us know your opinion in the comment section below. Please don't forget to give us a like, subscribe, and turn on notifications. Thanks for watching.